Are prorated taxes considered prepaid expenses for home buyers? Have you ever wondered how property taxes fit into the home buying process? Specifically, are prorated taxes considered prepaid expenses for home buyers? Let's break this down in a straightforward way. When you purchase a home, property taxes often come into play. Typically, these taxes are paid in advance for the part of the year you own the property after closing. This means that if the seller has already paid property taxes for a portion of the year, you will need to reimburse them for the time you will own the home. This reimbursement is what we refer to as prorated taxes. At the closing of your home purchase, the buyer usually pays the seller for the prorated amount of property taxes. This amount is calculated based on the closing date and the end of the tax period. It is important to note that this prorated tax amount is collected upfront and placed into an escrow account by the lender. This ensures that future tax payments are covered, which is a smart move for both the buyer and the lender. So, why are these prorated taxes classified as prepaid expenses? Prepaid expenses are costs that are paid at closing but cover expenses that extend beyond the closing date. In addition to prorated taxes, other examples of prepaid expenses include homeowners insurance and mortgage interest. When you see a property tax charge at closing, it can be a bit surprising, especially if the tax bill is not due right away. However, understanding that prorated taxes are considered prepaid expenses clarifies this situation. It also explains why your monthly mortgage payment often includes an escrow portion. This portion accumulates funds for future tax and insurance payments, ensuring that everything is paid on time. In practical terms, knowing that prorated taxes are prepaid expenses helps you prepare for what to expect at closing. This arrangement protects both you and the lender by ensuring that tax obligations are met promptly. To sum it up, prorated property taxes are indeed considered prepaid expenses for home buyers. They are collected at closing and held in escrow to cover property tax bills that will come due after the purchase date. Understanding this can help you navigate the closing process with confidence.